What's up everyone, it's Claudio here, and in this video I'll be going over all of my positions in GameStop, AMC, BlackBerry and Nokia to see how much I'll be profiting or losing in the current short squeeze situation in the market. Will it be enough for a new bike? Will I have to sell all my bikes to cover the losses? Let's find out. For those that are new here, I've been cycling for 3.5 years and racing pretty much all of it. I'm a Cat 4 and I post a lot of criterium and circuit race videos, so if that's your thing, welcome aboard. I'm currently building my fitness to peak later this summer, so follow along as the season progresses. And you can follow me on Instagram, where I post all my workouts on my Instagram stories at Claudio_Fierro. I just started my short power build on Trainer Road, and I got into some Zwift races to dust off the cobwebs. I'm watching the watts here. This is painful stuff, guys. I mean, look at my heart rate already, 176 BPM. So I'm sure most of you are aware there's this whole situation happening in the stock market right now. I'm no expert and a complete beginner in this world, and this video is purely for entertainment purposes, but I will attempt to brief you in under 60 seconds. There are stocks in the market. Some do well, some don't. You can bet on a stock to do well by buying it before it rises and then selling it after it goes up for a profit. You can also bet on a stock to not do well, and this is called shorting. So hedge funds, who are essentially a group of wealthy people, heavily shorted GameStop along with other stocks such as AMC, BlackBerry, and Nokia. They bet that these stocks would fall. Then this group of everyday investors on Reddit called Wall Street Bets figured this out and joined forces to buy as much GameStop as possible. This caused the stock price to go up. Then when the hedge funds realized this was happening, they had to buy additional shares just to offset their huge losses. And this is what created the short squeeze. The price of GameStop skyrocketed by over 1,000% in just 1 week. And other shorted stocks have seen similar increases of over 500% in just a few days. So how are people like you and me able to make money here? Well, it depends on how early you bought into these stocks before they went up. If you were already following Wall Street Bets on Reddit, you probably knew about this before it escalated, and you bought in early. But if you're like me and joined in the middle of all this hype, it really depends on when you bought in and what will happen on Monday when the market opens. Before I tell you what positions I'm holding, let's try to figure out how much money you could have made if you bought in GameStop early. When the market opened last Friday, January 22nd, GameStop was at $45 a share. Let's pretend I had purchased 1 share at that price. When the market opened the following Thursday, January 28th, it had gone up to $469 per share. That's a 942% increase, turning my $45 investment into $424 of profit. Now let's pretend I bought 10 shares at $45. Selling those 10 shares at $469 per share would turn my $450 investment into $4,240 of profit. And if I had purchased $100 at $45 a share, my $4,500 investment would turn into $42,340 in profit. But no, these profits are all before taxes. And now for my big reveal. What am I holding? Before I reveal, I want to be very clear about the following. I am only using money that I can afford to lose completely. It's not money for rent, for living expenses, or for my business. It's not money from my retirement account. It's money that I had in another bank in a savings account that I use only for having fun with at the end of every quarter. I am completely okay with losing all of it, and it will have no negative effect on me whatsoever. This was a very calculated decision and purely for fun. So I bought in at $312 a share of GameStop, but I only bought 1 share. Let's say it goes back up to $500 a share and I sell. That's a 60% increase for a profit of $187. It's hardly a new SL7. I'm also holding 30 shares of AMC, which is up, 10 shares of BlackBerry, which is way down, 1 share of Naked, which I bought just to test if TD Ameritrade was letting me buy at the time of restrictions, and 14 shares of Nokia. Overall, my profits are a whopping $55.67 as of Sunday, January 31st. So basically, I can buy a few pairs of socks. Now let's figure out how much GameStop I would need to buy in order to potentially buy a new specialized SL7, which goes for $7,200. At $312 per share, if I had purchased 13 shares for $4,056 and sold all of them at $469 per share on January 28th. The 60% increase would yield a profit of $6,760. So an investment of $4,056 plus a profit of $6,760 would give me a total of $9,880. Since this would be a short-term capital gain, you would get taxed on your tax bracket. So let's say about 22% would have to go to taxes. That gives me a net profit of $5,270. Plus my initial hypothetical investment would give me a total of $8,390. And that's enough for a new specialized SL7 Pro with Ultegra and Di2 plus tax, plus maybe even a new kit to go along with it. Now let's look at the other side of the coin. If I had purchased 13 shares at $312, putting down $4,056, then the stock crashed down to $45 per share. It would turn my $4,056 investment into $450, giving me a loss of $3,606. I'd have to sell my beloved Super X to cover that loss. Be careful out there. Okay, so we have established that these stocks are very volatile and very high risk. Let's conclude with investments that are lower risk and more practical. I've been looking into ETFs, or exchange traded funds. These trade just like stocks, but they don't just represent one company, they represent a basket of companies. For example, let's look at VGT, which focuses on the IT sector. Inside of the basket of VGT, there is Apple, Microsoft, Visa, Nvidia, plus a bunch more. Because ETFs represent so many companies, they are less volatile. If one company goes down, you have all these other companies supporting the ETF. Looking at the 10-year growth of VGT, it's been pretty steadily rising. Last year's return was 33%. Let's pretend it will continue to yield 30% returns over the next 5 years. If I put $3,500 into VGT, at 30% increase, it will yield a profit of $1,050 per year. And over 5 years, that will turn into $5,250 in profits. And I would only get taxed 15% for long-term capital gains, which is one of the perks of holding your positions longer than a year. This would give me a net profit of $4,462. Add that to my initial investment of $3,500, and it comes out to $7,963. That's a new bike day in 5 years. Pretty sweet deal if you ask me, and a much lower risk. So a lot of things will be determined this Monday when the market opens. Will I continue to hold? Will I sell? Follow me on Instagram to stay up to date. Thank you so much for watching this video. I hope you enjoyed its strictly entertainment value. Give it a big thumbs up if you did, and feel free to subscribe for more content like this. I'll see you on the next one. Peace.